Hey everybody, welcome back to Mortgage 101. My name is Kristi Dourian. I'm a real estate loan officer at First Financial Bank and an in-house partner with Dana Simmons Real Estate. And today we're going to talk about interest rates, but be sure to stick around for the end of the video where we will cover a lesser known tip or trick. So, interest rates, what determines my interest rate? Lots of factors go into this. Interest rates are priced based on risk. So, things like your credit score and your down payment or loan to value ratio make a big difference. And also the intent to occupy, or are you purchasing this as your primary residence, or are you purchasing it as a rental property or a vacation home? Those things have an impact on the interest rate that you'll qualify for. And then also the type of property it is, whether it's raw land or a traditional stick and brick or a manufactured home. So all of those things help determine what interest rate you're going to qualify for. There's also the type of program that's involved, whether it's an FHA, conventional, VA, or USDA loan. So those are the things you want to look at when it comes to interest rates. APR is a common term that you'll hear whenever you're shopping for interest rates among different lenders. APR doesn't only include the interest that you're paying, it's also going to include certain upfront prepaid costs. It's a whole compliance thing with truth in lending. So that's wrapped into the APR calculation. But the biggest help would be just to consider APR. Think of APR like your unit pricing at the grocery store. It helps you kind of just compare the cost of this loan expressed as a percentage versus the cost of this loan. So which lender has the better interest rate and fees. And then a lesser known tip or trick is going to be premium pricing. If you have limited funds to close and you're comfortable with a little bit higher interest rate, talk to your lender about premium pricing the loan. That's where you're going to do the opposite of paying points to buy your interest rate down. That lender is actually going to give you a premium credit at closing in exchange for you selecting or locking in at that higher interest rate. And that can reduce your out-of-pocket costs a whole lot if you have, like I said, if you have limited funds to close. So thanks for joining me. If you want to connect, click the link in our bio, and I'll speak to you again soon.